Good morning. This is Japanese Economic Review Channel. May 29th marked a historic milestone for global markets. Driven by a massive risk-on rally, both Japanese and U.S. benchmarks surged to all-time highs. The Nikkei 225 reclaimed its record, closing above 66,000, while the Dow Jones solidified its position above the 50,000 mark. This session was characterized by extraordinary liquidity and a decisive shift in investor sentiment. The primary catalyst was the potential de-escalation of U.S.-Iran tensions. Despite conflicting reports and denials from some officials, markets aggressively priced in a best-case scenario, involving a 60-day ceasefire and guaranteed navigation through the Strait of Hormuz. This collective optimism effectively overrode immediate geopolitical uncertainty, sparking a broad-based global buying spree. The momentum began in the U.S. on May 28th. The Nasdaq's sixth consecutive day of gains was fueled by a, quote, semi-premium, with giants like ARM, AMD, and Qualcomm leading the charge. This surge in high-tech and semiconductor stocks provided a direct blueprint for the Japanese market's performance, as global capital remains inextricably tied to the AI and chip sectors. In Tokyo, the Nikkei 225 peaked at an unprecedented 66,505 yen during mid-afternoon trading. What makes this rally remarkable is the sheer scale of participation. Trading value on the prime market reached a staggering 16.3 trillion yen. With nearly 1,000 stocks advancing, the market demonstrated structural strength independent of currency fluctuations, as USD/JPY remained stable at 159.25. We saw a clear rotation into cyclicals. Tech, electronics, and travel sectors, including Keyence and JAL, captured the bulk of the liquidity. Conversely, defensive and resource-heavy sectors like mining and agriculture faced headwinds. As geopolitical risks receded, the appeal of commodities like oil diminished, leading to sell-offs in stocks such as Inpex and various paper manufacturers. A critical takeaway is the widening gap between market tiers. While the prime market thrived, the growth market 250 index faced a sharp decline. We witnessed a space tech collapse, with speculative names like Astroscale and iSpace being sold off. This suggests that risk-on does not apply equally. Investors are actively stripping capital away from speculative ventures to target established giants. In conclusion, the current regime is defined by a flight to liquidity. Investors are ignoring short-term news noise in favor of structural geopolitical shifts and semiconductor-driven growth. The massive 16 trillion yen turnover in Japan confirms that this is not a mere speculative bounce, but a significant reallocation of global capital toward high-quality, large-cap equities. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.